This is the second video in an introduction to managerial accounting. In this video, we are concerned with learning objective 3 and 4. Okay, define the three classes of manufacturing costs and distinguish between product and period costs. In the first video, we looked at the roles that a manager performs. And those roles are in three categories: planning, directing, and controlling activities for which a manager is responsible for. Now, to carry out these planning and controlling roles, a manager needs financial information. Information involving the costs to make a product or service, or the cost involved in increasing or decreasing production volumes, or the cost to buy a new machine to automate the production process. In short, a manager needs to know the cost for all the activities under his or her control. For example, now, the cost to manufacture a product. These costs can be categorized into three different categories. 1, direct materials; 2, direct labor; and 3, manufacturing overhead. These are all the manufacturing costs that are incurred to produce your product. Let's assume now that we are going to manufacture a desk. Now, all the costs to produce this desk can be categorized as either 1, direct materials; 2, direct labor; or all other costs are categorized as manufacturing overhead. The first category, direct materials. Now, to begin with, we have what are called raw materials. These are the basic materials used to produce my desk, like wood, like laminate, like steel. Now, and glue. Now, we further categorize the materials into what we call direct materials. These are the materials that we can physically trace and directly associate with the finished product. We can measure actually exactly how much wood went into the manufacture of the desk, how much steel went into the manufacturing of the desk. Now, you contrast that with indirect materials. Now, indirect materials are materials that are necessary to produce my desk, but are not a significant part of the finished product in terms of that. These direct or indirect materials, such as, if I'm talking about my desk, would be glue. Now, I know I couldn't manufacture the desk without gluing the laminate to the wood, but that glue is necessary to produce the desk, but I don't know exactly how much was used, so I classify that as indirect materials. Next, the second category of manufacturing costs is categorized as direct labor. Now, direct labor is the work of factory employees that can be directly associated, and we can measure how much of the worker's time went into producing the product. This is called direct labor. This is the people, the employees who physically worked on the product. We contrast that with indirect labor. Again, these are employees who would be necessary to produce my desk, but for example, it's a supervisor. A supervisor doesn't necessarily work on the desk, or the forklift driver. They don't work directly on the desk, but nevertheless, we couldn't manufacture the desk unless we had these people on the factory floor. The third category is manufacturing costs. Now, these are all indirect costs. They're costs that are indirectly associated with manufacturing my finished product. It includes indirect material, indirect labor, and all other kind of manufacturing costs. Or another way to look at it is, they're all the manufacturing costs except direct materials and direct labor. They're all called factory overhead or manufacturing overhead or indirect manufacturing costs, or as the British call them, burden costs. Now, if you're considering a manufacturing factory that manufactures desks, all expenses or all costs incurred in that factory are either costs that could be categorized as product costs or costs that are period costs. Now this distinction is very important for the third video where we look at producing a cost of goods manufacturing statement. To begin with, product costs, as we said before, are these three cost elements. These are the costs associated with producing my product. And they can be categorized as some of the costs of direct materials, some are direct labor, and all the others are manufacturing overhead. These costs are a major part, an integral part of producing the product. But you see, when I incur the cost of wood and laminate and glue and manufacture that product, I'm actually manufacturing my inventory. I'm not buying in my finished goods inventory, I'm manufacturing my finished goods inventory. So these costs are actually the cost of inventory, and that's why they're called product cost. They do not become an expense in the income statement, and that expense is called the cost of goods sold, until in fact those goods are sold. Now we contrast with period costs. Period costs are those costs that are incurred during the accounting period that I'm in. And these costs are expenses, normal expenses like rent and salary expenses of the employees who do not work in the factory but actually work in the front offices. These are non-manufacturing costs. And basically they're in two categories, selling and administrative expenses. So once again, all the costs in a manufacturing plant or factory can be categorized are either product costs or period costs. Product costs are three categories: direct material, direct labor, and all other indirect costs. Period costs are the cost of selling and admin. Now perhaps what I'll do next is draw for you what a factory is so that you can get a better picture of what I'm talking about here between the product cost and period costs. Okay, let's picture this as a manufacturing plant. It's a plant, okay? It has a back door. This is the back door. All right, here's the front of the plant. This is the front office. Front office. So if you walked into this factory building, out here would be displays of the products they produce. This would be the president's office down here, the secretary. The selling people would have offices here. This is the front door. If I could spell it, that's what you see. Now back here is the factory. This is the factory behind this wall here. And on the factory you would see different machines, cutting machines, bending machines, gluing machines, and so on. And there would be a whole area over here where the finished product is stored. Okay, finished desks, let's say. We're going to produce desks, like the desk you're sitting at. Now, to begin with, in comes the raw material. This is called raw material. This is the wood and the laminate and the steel that's not been cut or bent or anything. It's raw. And there's a person in here that accepts this inventory and keeps track of it. This is a perpetual inventory system. Remember when we talked about financial accounting about perpetual and periodic? This is perpetual. We know exactly how much raw material we have. Now, the production process begins by somebody going and getting wood and bringing it over to this machine and starts cutting it. And then this machine starts drilling it and then gets some metal and bends it over here. We're making a desk and glues it. Each one of these are machines that have a specific function to produce the final product. Now we're going to convert raw material to a finished product. So you see we have three inventories. One, raw material inventory. Okay. Three over here is a finished goods inventory, my finished desks. And while the desk is being worked on the floor, we call that work in process inventory. It is no longer, once the desk is started to cut, I took the wood and began to cut it, then you see the wood is no longer raw material, but it's not finished goods, so it's work in process. And so therefore, when we're talking production costs are the material that went into producing my desk, the direct labor, the time card for the guys that actually worked on these desks as it moved from station to station or machine to machine, and all other manufacturing costs, such as depreciation on the machines, such as rent on the factory building, such as AC that's gone on it, such as the forklift guy that moves the material from one to the other, such as a supervisor. All these people are necessary to produce the desk, and they're either direct material or indirect, or direct material, direct labor, or manufacturing overhead. These are the product costs, all costs to produce my desk. All these costs in the front here are called period cost. They have nothing to do with producing my desk. Marketing has nothing to do with production. It's finished. Selling and administration and advertising and secretary salary and payroll accountant and all of those guys are period costs. Same with the warehouse person here who receives the finished desk and holds it in finished inventory until it's sold. He too is a period cost. And then when we deliver the product to the customer, the cost of the delivery truck and the delivery person and all of that are period costs. So we must distinguish between the cost to produce my product and the cost to market and sell and deliver my product. Because the cost to produce the product are inventory costs. And inventory is an asset. It's not an expense. And that's a general idea of what a factory would look like. In the next video then, we will look further at how I produce a cost of goods manufacturing statement.